and I'm a day trader. I've been doing day trading for over 48 years. So I hope you enjoy my channel and subscribe so we can make more videos for you. Thank you. Thanks a million. Alrighty, we're already now on the other side of the screen, and I'm going to show you some about this day trading. This is the trade that we did yesterday. It was done with FedEx, and it took place right in here. You see my marker. It took about, when the market opened on November the 3rd, we went ahead and entered someplace around this point, as we're going to see later, and we exit at this point. As you can see, the rest of the day was a waste of time. So this is kind of momentum trading, and we happened to catch at the right time. We follow the indicators, as you're going to see later on, and we just act on those indicators to do the trade. If the indicators don't point in the right direction, we do not take a trade. So just remember that, so it won't be no confusion. And we're going to look at the moment of the trade first. Okay, so let's look over here, and this is where it happened as it started in the morning. The market opened up, and it starts swinging this way, and then right around this point, in about 9:51 New York time, it's very important that you know how your chart is set up to do this. So we had the WAP, you know, as the dotted line. We had the 21-day spontaneous moving average. We had the moving average of 200-day, that's, you know, and the 12 days. So we only have 3 averages, and we try to get as simple as possible. And the chart is set a 5-minute trade. We also track on that the S&P 500 and the Russell 2000. So at the signal here, you know, this is the signal that we decide to buy, and we use the PPO and we use the TSI. They look very similar, but they measure differently. The PPO is no different than the MAC. They're cousin, they're related to each other. And this actually measures the price percentage oscillator, and the other one measures the price of the stock itself. So based on this signal, this is how we're going to enter. So we enter right here, and right around here we get out, and that finished the trade. So doing that, we can move over here now, and you can understand where we were. At 9:51, we jumped in. We already have seen the S&P 500. By 10:09, we figured that this stock probably don't move any higher. You should know the history of the stock. And with that, we move into the trade. So we enter right here at 9:51. This is the actual ticket from the broker. And you can see the stamp of the clock order date, 9:51:03. So that was about 9:51. We bought 10 contracts of FedEx. And with those 10 contracts, we move in. And by 19 minutes later, we exit out. So we actually exit. So we bought it at 6:52, and we sold at 8:32. So we have a little gain there. So now to look at the transaction, how it took place, you can see that we bought 10 contracts for November 13, 2020 at $275 for FedEx. These are call options. We pay $652, I'm sorry, times 1,000. So that's 10 contracts, and each contract worth 100 shares. So the actual cost is $6,520. We sold 19 minutes later at 8:32 times 1,000, 8,000. So the difference between the 8:32 and the 652 is $1,800 in 18 minutes. We were fortunate again too that we have a price improvement of $230 when we bought it. So we pay less than the actual market. And when we sold it, we were lucky enough to also to sell it and got a price improvement of $270. So we got more than the market price at that time. Now, let me show you something else that's very important. I want to show you here the following. We bought the 275, but I want you to see right here on the options that the ask and the price bet, when you look at it, we have almost from 940, let's say that you're going to buy a 275 call, and you want a market order, you have to pay $8.60, okay? But when you sell it, you're only going to get $8.10. So in other words, there's 50 cents difference. That's the spread. This is what the market maker is making with you, okay? So they're making 50 cents a share on that option. That's very important, because what's going to happen here is that when you start and you buy it, I buy it at a market, as you saw, and I pay $8.60, right? So we pay $6.50, right? So we pay $6.50 when the price was about $6. So we're paying 52 cents more a share. So when we started in the red by $600. Okay, you paying at the ask price, but the quote is actually 50 cents less than that on the stock. So when you buy this option, you're going to start on the red. So for me to make $1,800, right, I have gained about $2,300 to get here. But remember, when I sell it, I also going to have to sell it at the bet price that is going to be another 60 cents. So that could be between $1 and $1.10 different to turn around this trade, which is this trade should have been $2,800. But I give the market maker about $600 on each trade. And be aware of that. You know, so the numbers look good. It's I could have made more, but we have to understand that if I wanted to get in, the market maker, they already have set the price. The bet right here and the ask on your upper right-hand corner. This is what it closed yesterday. It went up $7.50. But that's quite different on every one of them. If you want market order, you're going to have to pay $5.50. But when you sell it, you're going to get $5. So here's the catch. You buy $5.50, so you started already at 50 cents lower. So you're in the red by 50 cents per share. So that's $500 on 10 contracts. So this is what I had to do here. So I want you to be aware of that they carry between 10 and between 50 cents and 60 cents different between when you're selling and when you're buying. So you get cut twice on this deal. Remember, you cannot put a sell over here or you an order on a limit order because it probably never fill, and you only got 19 minutes to do this trade. You know, you cash in this momentum and then the rest of the day is going to be over. So with that in mind, I just wanted to show you that so you understand what's happening here. Next, not to just look at the $1,800 that were made in 18 minutes, but for that, I had to sacrifice $1,000. And with that, I want to thank you for your time. If you have any questions, you always can put a comment on the bottom and I'll be glad to answer it for you. But this is how you do day trading in option. And I hope that you'll be able to do the same. If you think that this is a good idea, or that you like the way I do it, just let me know so I can make more live day trading for you. Thank you.